The ADP report shows employers added 190,000 new jobs in August, a bit below economist expectations. Robert Brusca is here. He's chief economist at FAO Economics. Good to see you once again, Bob.
Thanks. Good to be here.
So the number was slightly below most of the estimates. We did see a revision in the prior month, but there's no real cause for alarm here, is there?
Oh, no, this is not an alarming number. This is pretty much in the ballpark of where these numbers have been. On the weak side of where they've been, but still, a firm number for job growth.
So that, I would assume, bodes well for Friday's number. Do you expect payroll growth over 200,000?
I'd expect it somewhere on the ADP. The ADP is sort of a fair estimate of what the payroll number is going to be. It's not always a good estimate, but it's sort of a fair estimate. Over time, they tend to give us the same signal. So, it seems to be saying we're going to get a number somewhere around 200,000.
So obviously, we've had this very interesting couple of weeks on Wall Street. A lot of volatility, a lot of worries about this China slowdown. But it doesn't look like we're seeing that just yet factor through into the labor market at all. Is there a concern that it might?
China is an important global market, but the United States doesn't send a lot of exports there. U.S. corporations, however, get a lot of their earnings from their foreign subsidiaries, so you'll probably see it in GDP numbers in terms of weak corporate earnings. You may see some slightly weaker U.S. export numbers, but U.S. exports have already been struggling in a very tough global environment, and particularly in an environment where the dollar has been so strong.
I want to ask you as well, when you're looking at the numbers that'll come out Friday and you take into account what we saw today, we just had Stanley Fischer talking about inflation eventually getting up to the Fed's target level over the weekend at Jackson Hole. What about the wage inflation equation? I mean, we've seen a little bump up in wages, but nothing really substantial. When do we see that?
No, wages are lagging, and this is a problem. The job market, some people will say, is tight because the unemployment rate's at 5.3%. But there's a very strong correlation between the unemployment rate falling and the participation rate falling. So we really don't know where the unemployment rate needs to be. So if we look to other signals to tell us, we see that wages aren't acting like the job market is tight. The wage numbers are telling you there's plenty of labor out there and there's no pressure at all. So I think that one of the things we need to see is to see wages move up in order to tell us that the job market is tight. Another way to say that is that there's no evidence that that's happening yet.
Do you think the Fed will take that into account this month when they meet?
No. I get the sense that the Fed sort of has the bit in its teeth and it wants to hike rates. I really don't think that the Fed can say that it's comfortable that inflation is going to be to 2% in the intermediate term. I think oil prices are still weak and very much oversupplying the oil market. They could get weaker. Commodity prices are weak. And in fact, inflation and the headline for the PC is still trending down. So I think the Fed has a problem. I think it's going to have a credibility problem if it hikes rates in September.
Interesting. In terms of the labor market the rest of the year, what's your outlook? Do you think we can sustain this 200,000 per month job growth? And does that get impacted if the Fed does what you think it's going to do?
I think the job market is going to produce some slower job growth at the end of the year. I think this 200,000 pace is a little bit too high. Consumer spending has been a little bit weak outside of the auto sector. The auto sector has been pretty spectacular, but even there's evidence that unit sales are actually slowing. So they're down to 4% from 7% early in the year. So I think the growth for autos is going to slow, and that's going to have a big impact on spending and on growth.
Robert Brusca, great to see you. Thanks for coming in.
Thank you.
I'm Rhonda Schaffler for The Street.